Good afternoon, or should I say good evening, everybody. Welcome to the February meeting for the Baltimore Stock Market Meetup Group. Thank you for joining me. This is one of my favorite times of the month on the first Tuesday. I literally love talking and sharing information about the stock market. So for those who are new, we meet the first Tuesday of every month at 7 o'clock, and it is a virtual meeting for now. Still looking for a good location to host the meetings, but all levels are welcome from beginners to experienced investors. So thank you for joining us for tonight's meeting. I'm your host, Coach Mike, founder and CEO of Walk On Consultants, where I help new investors get off the bench and get in the game. And I also consult the more experienced investors who need someone to talk to when they have investment ideas in their head. I always begin the same way with the quote from Benjamin Franklin, and I couldn't have said it better. You know, you got to invest in learning. If you don't know what you're doing, you're just guessing, throwing darts. It's all about the knowledge, and I'm a coach, and I'm here to teach and show you how to do it. Now, I got to say, this is not investment advice. I just want to make that clear that this is not investment advice. The information I present is for informational purposes only. You should consult, I guess, your own legal advisor, tax advisor. But I am a coach, and I'm going to show you how to do it. But I'm not going to do it for you or tell you which stocks to buy. And you need to remember also that whenever you invest, there's going to be risks. Some risks are low, medium, high. Not all risks are the same. So 2 things you need to know is how risky is the investment that I'm going to put my money in, and what type of an investor you are. So are you the conservative investor, or are you a roll the dice type of investor? You need to know what investor personality type you are, but also you need to know how risky is the investment that you're going to put your money in. So keep in mind those 2 things. Lastly, from time to time, I will share third-party links from Yahoo or Investopedia. Just understand that that information that they're presenting is their information, not my information. So I just want to get that out of the way. So without further ado, let's get started with this month's discussion for Oatly. Some of you may have heard of this company or have seen the resurgence or surgence of alternative milks, right? I remember growing up, we just had regular milk and 2% milk, and that's it. Then there's almond milk, there's soy milk, now there's cashew milk, and I think last week I saw pistachio milk. It's crazy. And now we got oat milk. So there's always an alternative coming up, like, you know, because I guess a lot of kids have nut allergies. They can't drink the oat milk. I mean, they can't drink the almond milk or the cashew milk because they have a nut allergy. But then some people are lactose intolerant, can't drink the regular milk, you know, the cow's milk. So now we got oat milk. So that's what we're going to discuss tonight, is the company called Oatly. Now, I remember when they first went public back in 2021, it was a huge success, $17 a share. It was valued at a $10 billion company. It was a huge success, right? Stock popped on the first day. It's like, great. 18% in the first day. So I've been watching it. I did not invest at the time. I wanted to, you know, wait and see how until the dust settled, and I'm glad I did, because since the IPO, the stock has done nothing but go down. Yeah, it had a big pop in 2021 from $17 up to maybe $30, but it's been like a straight down, like a roller coaster down that didn't come back up. And you got faked out maybe like, what's that, August, September? It looked like it was going to bounce back, and then straight down. 4 years of straight down, like nothing, literally nothing. So I figured, you know, maybe I'm going to revisit this one and maybe jump in the stock now. So before I buy a stock, I normally look at the last 6 months and see what it's done. I do look at the long term, but I when I'm ready to invest, I think I look at the last 6 months. It looks like there's been sort of a bottoming, if you want to call it that, right? Never try to pick a bottom. That's lesson number 1. But it looks like there's been a bottom and there's been a rebound. And I recently bought this at $1.02 per share. Now it's at hovering around $1.14, $1.15 a share. I got in at $1.02. Just to let you know that I'm putting my money where my mouth is. It's not just talk. I actually did buy the stock. Not saying that you should buy it because Coach Mike bought it, but I'm just saying I bought the stock myself. So like I said, it's at around $1.15 a share. Now, this is typically not a stock I would buy because it's a penny stock. And although it's not a penny, right, or pennies, it's still less than $5. Anything less than $5 technically is a penny stock. And less than $1 billion market cap. This is only 682 million. And typically these small companies are unprofitable, which so these is like three strikes. I never invest in companies like this, but I guess every now and then you step outside your comfort zone and you do something a little bit different, right? And also at the bottom, looking at the Yahoo Finance, they say it's overvalued. So even at $1.15, they're saying it's overvalued. So this is clearly not the type of company I would normally invest in, but hey, I'll take a chance. Small investment. Let me try and see what happens with this one. So let's go to the fundamentals. As you can see, they have been selling more product, right? From 2020 to 21 and 22, 421 million to 600 plus million, over 700 million. I think 2023 is going to come in probably around 800 or maybe 850 million. Not quite $1 billion in sales yet, but they're growing, but they keep losing money. Not a good sign, right? Not a good sign to keep losing money year after year. And they keep missing the earnings expectations. You know, Wall Street watches you and they have an expectation. And if you don't meet expectations, your stock gets punished. So they met, then they missed, they beat. It has not a good track record, not a good track record. So fundamentally, not a stock I would normally invest in, but I stepped outside my comfort zone. What can I say? Now, technically, this is where it looks good. And I'm not going to bore you with all the reading here, but you can read, you know how to read. So the one reason I started becoming more and more interested in technical analysis is because the fundamentals tell you what the company's doing. The technicals tell you what investors are doing. So investors are buying the stock because it's going up. Momentum is there, the volume's increasing, the trend is going up. This is what investors are actually doing. So somebody likes the stock, somebody's buying the stock. It's simple supply and demand. If you have more buyers than sellers, the stock's going to go up. So I started looking at technical analysis a lot because the fundamentals do tell you what the company's doing. The technicals tell you what the investors are doing. You need a little bit of both. And so it's been gaining momentum. The red and the green lines I have here are the 50 and the 200-day moving average. You can see it's crossed over the 50-day moving average, not crossed the 200 yet, but it's gaining momentum. And these are long-term indicators of where the stock's been and where it's going. Definitely gaining momentum. And I use a 6-month chart and I use a 50 and a 200-day moving average. So now, anecdotally, here's some of the things or some of the news that's out there on the street, right? They got a partnership or their products are in stores at Starbucks. So all you fancy coffee drinkers, or really you're probably not even coffee drinkers, because when you order that grande latte frappuccino with oat milk and caramel, whatever you order, right? It's more sugar than coffee. It's not really coffee, but oat milk and Oatly is one of the products that Starbucks is using. And you know how many Starbucks they are. Actually, we don't. We just know there's a lot of them. They're on every corner like McDonald's, right? So that's one good sign that their product is getting some notice in the industry. Second one is that they have a partnership with Carvel ice cream. Now, that name might not be as widely recognized. I grew up in the Bronx, New York. We had a ton of Carvels. I live in Baltimore now, and I don't hardly see any Carvels ever. It's all about Rita's ice cream. But nonetheless, Carvel is not a small company. They got 300 stores, sell across the country. The stock jumped 12% on that news. So I'm starting to see some good signs here. The stock's going up. They have these announcements with good companies. So good sign, I jumped in. Also, some new products. Now, I cannot imagine cream cheese from oats, but okay, if you say so. Then they got yogurt. Okay, that's maybe, right? And then they got ice cream, but they call it dessert. They don't call it ice cream. I guess you can't because it's not really dairy. And then they've got these dessert bars that they have here, chocolate fudge bars, and some other strawberry swirl dip bars. But okay, they got some new products. So another good sign that the company's growing and expanding. All right, so now I think this is one of the last things that the Wall Street analysts, CFRA, they rate it as a whole. They give the 12-month price target of $1. Well, the stock's already at $1.15. So how much further can it go? That's why they rate it as a whole. They don't see much growth in the future. Remember, you're investing for the future, not the past. Another analyst from LSEG, they don't give a price target, but they give it a score from 1 to 10, and they rank it as a 6. And they make a mention in their report that this is an upgrade from a previous score. I think it was a 5. So that's another good sign. It was a 5, now it's a 6. Still not a 10, but it's moving in the right direction. So I want to know, what do you think? Would you buy this stock? If you didn't own it already, and I'm assuming you don't, would you buy it? Okay, if you owned it, would you sell it? Or would you just hold it and wait for the future to see where it goes? What's your opinion? Type your comments down in the chat. Let me know, what do you think? Is this a buy? Is this a sell? Or is this a hold? I want to know what you think after you've seen my comments and what the street's thinking and where stock's been and where it's going. Give me your opinion. I'd really, really like to know what you think about this stock. Okay, just last few slides here. I'm going to wrap up. This stock is in the consumer staples industry, which is only 7.2% of the S&P 500. So if you're structuring your portfolio, it doesn't have to be 7% of your portfolio, but just keep in mind, this is where they stand in the S&P 500. Companies in that industry only make up 7% of the total S&P 500. Technology is always the largest percentage. So just food for thought here, that make sure you have a diversified portfolio. Don't put all your eggs in one basket. I always show this at the end of my presentations. The other thing I always say at the end of the presentation is that you got to monitor your portfolio. I'm building a community of DIY investors. And one of the things you got to remember, if you're going to be a DIY investor, you got to watch your stocks. Does it have to be every day? No. Every week? No. But at least quarterly, when they report their earnings, you got to know what's going on, what's happening. This company will report their earnings on February 15th. So stay tuned and see what happens on February 15th. And if it's too much and if it's overwhelming, always, hey, book an appointment with Coach Mike. I can help you, okay? Remember, I'm the personal trainer. I'm not going to do it for you, but I will help you do the work. All right? I always say that learning is a journey. It is not a destination. Recently, I just signed up to take 3 courses on trading because I'm a long-term investor. I'm not a trader. But hey, there's always new things to learn. So I just signed up for 3 courses on how to become a better trader. So hey, I encourage you to do the same. And don't think that you're going to know it all. I've been investing since the 90s and I'm still taking courses. So keep your mind fresh, learn new material, tune into my podcast, my YouTube channel, and keep learning. Wrapping it up here, just want to say, hey, I'm Coach Mike. Thanks for tuning in. Here's my contact info. Book a free 15-minute appointment, and let's figure out if we can work together. I'd love to work with new investors all the time. So thank you very much.